to talk on there. I also do think they're going to talk a little bit on. They mentioned they're being talked about new infrastructure. So I think a lot of it's going to be about how they plan on implementing Palantir's data with theirs and what that looks like. Some people are speculating a new announcement. Not sure if we're going to get one. There's been a lot of news lately. We also have Greiner not that far away, so I don't know if they would announce it now. Wait, music's loud. Let me mute it. It's the please wait thing. I guess you can hear it through my mic. But so yeah, that's what I would expect. Let me know if my mic sounds all right. I messed with some filters to get the like outside staticky noise better, so it should sound good. But I want to make sure. But that being said, I actually haven't looked at how the market's closed out today, so I figured we could do that because we normally do that before these live streams. And just kind of give an idea of what I'm looking for. Yeah, it was way too loud. Okay, mic's good. Perfect. Yeah, my mic can pick up a lot, and I thought it'd be fine because I had the computer muted, but that's fine. So this is SoFi. When I'm looking at Zeta also, what I like seeing is we have a big bull forming for the TA guys out there. And so I'm being very patient with the setup. And when I talk about on X many times is I talk about, I don't talk about it like I do hymns necessarily, because the hymn setup is way more explosive than the Zeta one. The Zeta one I've mentioned several times where I think in 2026 we're going to get back up to 30, 35, and I'll oftentimes name $30 as a target, and people are like, you're way too bearish. But I'm thinking, when I say that, I'm thinking more in a short time frame, because I think this slow bull is going to continue to form. And like when I just kind of like even map it out with my mouse just to kind of like get an idea of where I think it about finish, it finishes right with the Santa rally. And then I think there could be some struggle maybe after the Santa rally, get a little handle going. But I think 2027 is the year of price discovery, unless it's the fundamentals tell us otherwise. And I did mention yesterday in a post, I said that I think Zeta is on the verge of their breakout quarter. And let me pull up this real quick. Let me zoom this out. I had a tweet earlier. It wasn't my better performing tweets, but I think it's very valid. Let me find it real quick. Here we go. And so I saw this tweet actually when I was watching Tanner. You guys probably know him. I think his handle is it's not fun of investing, but it's something of investing, future investing, I think. And he posted this chart, and what I said to it was, do you want to know where SaaS companies are going? Watch its RPO. For those who don't know what RPO is, it's contracted revenue that hasn't hit the income statement yet. So it's pretty much just backlog. And it's absolutely been spiking for Zeta as of recent. I'd never seen this chart until yesterday. So I don't really know where he found it. But I caught it very interesting because this highlights the large deals they have been landing lately. And in Q1, they talked about landing their largest client yet. And now in Q2, they've talked about landing 3 of their 5 largest clients in this quarter. And that was at the halfway point of this quarter. So I'm expecting a huge Q2. And he hasn't talked much about since. But I also remember in the interview that he mentioned landing 3 of their 5 largest clients. He had talked about being on the phone on the way to that interview trying to land another client. So the clients are rolling in. You're landing larger clients, larger deals. I expect as these larger contracts come in, you're going to see companies feel the urge to spend more with you, and so your ARPU is going to go up, and that means wallet share is going up, and that's going to get them closer to that 10% wallet share goal. And I've spoken many times that I do believe Zeta's on its way to being inside every enterprise. And maybe it starts off as they're helping you with marketing, but I believe in this autonomous backend that they're creating. It's and when I say autonomous backend, I don't mean you're going to see McDonald's having AI run their whole marketing business, like inventory, like whatever you can think of. I'm not saying AI is going to run all that, but what I am saying is it's going to improve efficiency so much you could see workforces cut in half. And that's not to be a bear on employment because I don't want to see people lose jobs, but I think that increases efficiency so much that people will get put in other positions, and it's going to just ultimately increase productivity to degrees we haven't seen before. And that is why I'm very bullish on this. I'm not bullish on the idea of, people losing work, but I just think overall productivity and innovation is just going to increase from here, and people will find, the next thing to do. That's like before, software engineers used to not, be a real job. Soon, I can't really predict the future, but there's going to be something new that AI brings about for people to work inside. And it's also just going to allow businesses to expand bigger and bigger. So, yeah, maybe they need half the people to do current day's work, but maybe that current day's work really expands so they're still keeping, 80% of their current workforce per se, but they're putting out way more. So that is my little thought process on that. Just because it's hard I feel like it's hard sometimes. I put posts out there and you don't have tone. I also think some people probably think I just talk to talk. And the reason I say that is like and I'm not bashing these creators, but you have creators like Antonio who they have bad reps for just putting out price targets, and a lot of them, I'm not gonna say what his goal is when he does certain stuff, but there are creators out there who do that stuff, and it's just to create buzz and engagement, get their impressions up, and get a paycheck. That's the reality of it. And so I just want to make it clear when I say this, also not financial advice, but when I say stuff like this, like I truly mean it. So that's kind of where my mind's at. But I want to hear what you guys are thinking. What are you guys expecting going into this conference? What do you want to hear? Yeah, I want to know where everyone's head at because I've heard a few conspiracies about new product launch. I've heard, you know, just no buzz. So like you're not expecting much. You just think it's gonna be the normal Athena demo maybe. Um, what are you guys thinking, or where do you think the company's headed? Because I also still see people oftentimes, talk about it like a Martech. I mean, even when I watched Tanner's video, and the one thing I've caught on is like creators know their stuff. Okay, I want to ask you, Peanut, why do you think it's being overhyped? The biggest bear argument I hear around Zeta is they don't believe in the first party data. And I talked to someone about that yesterday, and I told them, I said, if you don't believe in the first party data, why why is their ROI so high? I mean, Forrester, who reported that now 2 years in a row, isn't associated with them. Why are they landing deals with Palantir and Snowflake, who are handing their data over because their model's so strong? So if the ROI is not true, which you have to prove to them the ROI is real, or else why should they give it to you? And then ultimately they're taking a bunch of market share, and Slowly over time, they're gathering the Fortune 500 one by one. And so, are these companies going to take on a new enterprise, just a new company to throw into the mix if they don't believe there isn't room to grow that relationship? That's my biggest struggle. And then I've heard people tell me their first party, third party data. Oh, the price action. Yeah, the price action's been dead, but I'm big on the longer you consolidate, the bigger the breakout. And I used to hear that saying all the time when I like really got into investing, because when I started, I didn't really know what I was doing. I got lucky a couple times. I bought American Airlines out of COVID because I was told by a family member to. It worked out. And then I bought Ford around that time because I low key just looked at how how Tesla was valued. I didn't really know what I was doing. I was like, EVs are popular. I was like, Joe Biden just got in office. The Democrats love EVs. I was like, the Ford Lightning could work out, and then that 2x. But my first real buy was SoFi, and in 2024, it was just dead. It had been dead for years, and everyone just kept telling me, the longer you consolidate, the bigger the breakout. What happened after that? It ran straight from 6 to 18. That's a 3x. I'm not saying this is going from 20 to 60, but this one has been held down for quite a long time, and they continue to execute. And that's exactly what I saw with SoFi. You would also bet that Meta, Google to completely wipe them out one of these days, recoup their capex. Well, the issue with that is Meta already said they don't. What up, Bob? Meta already said that they don't want to compete with Zeta. They'd rather team up with them, which is the whole reason the Zeta application layer can work on top of all these guys. David has said multiple times his point isn't to, you know, disrupt these guys and become rivalries. He sees it as better as they work together. 2, Meta's going to have to train their own model. 3, then you're going to have to team up with Palantir, Snowflake, and get their data to teach their models so they can do business intelligence. And then 4, by the time you do that, Zeta's already innovated. So that's why that idea doesn't work, and Zeta's talked about many times, or I don't believe it works. You could be right, but that's my reasoning. And like I said, by the time they actually do all that stuff, Zeta's been innovating and creating new things, and also then you have to convince all these enterprises they're working off of why should we leave Zeta for the same solution when they already have all our data? Because Zeta's talked about the moment you switch off them, you lose all progress. You're starting back from square one. So building that relationship is important. Anyways, this is about to start at 4:30. So we'll see if it actually starts on time. The last time it started like 20 minutes late. My top conviction picks, I'd say my portfolio. SoFi, Him, Zeta. I don't really necessarily have a. In order for me to hold a stock and hold a meaningful position, I have to feel like 100% about it, and I want to know everything, like I possibly can. I want to know it front, back, middle. Like there's not like a single page of the book I don't want to be unaware of, but I'm also always willing to learn, of course, because it's also impossible to be able to predict and see everything, of course. But that is why my portfolio is so concentrated. There's just different timelines with each and different risks with each. Um, like for example, I got rid of Iran, but it's not because I don't believe that there's not a big need for power. It's simply because I didn't trust management anymore. Like the moment I see one thing, I don't want you anymore, and that's why my portfolio is so small. I feel like there's very, very few companies like that. But the way I back it up is this idea that there are 10 generational, small to mid cap companies at once. I just don't think is reality. I think there are, 1, 2 a year that you can find. that are actually going to be generational. Most are going to be hype. And so if I hold 10 stocks, reality is most of them are going to be dead money, not moving, delayed a bunch. I mean, so that's why I keep my portfolio small. It's companies I truly believe are going to continue to grow, continue to compound, increase margins, and they just all have different timelines. SoFi, for instance, it's not going to move probably that much, if I'm being honest, in the near term. I don't see rates changing. I don't see gas coming down. I mean, oil is down, but gas is still staying up, and then you still are going to need what? This report's not going to show inflation down. So far, July prices are still up, so inflation's not going to be down. So it's going to be a while until you actually get that inflation report that shows prices are down. And then for the next Fed meeting, for them to actually cut, unless if they actually do look at live data like they say they will. Anyways, this thing's starting, so I'm going to quit my ramble. But, hold on. Never mind. It's not starting. It was acting like it was starting and then it didn't start. But yeah, so like, but my conviction's there. I know SoFi's going to continue to execute, so I'm going to continue to hold in the off chance they finally want to re-rate the stock. And then Zeta, for instance, I actually think can run soon. I mean, I was just showing you the chart. I think it's going to continue to climb up throughout the year. I think we're going to get that $30, $35 by end of year. And then I think 2027 is the year of price discovery. And I think if they continue to execute, there will be a big move, because $30 by end of year with what will probably continue being 50% growth. And I think organic growth can continue to climb up. It's 30% right now. I think it could get to 35% pretty easily. And then Hims, I think Hims is my hottest name right now. And that is because the Wegovy pill's on fire. People still got it confused that the economics aren't the same as compounded GLP-1s. They still think they make no money off of it, which is wrong. Management already came out and said the economics are pretty much the same as compounded GLP-1s. And then you have the potential of peptides. You have the potential of the Quickie pen, Zepbound pen, coming on shortage possibly. They're running out, and so if you get a shortage there, well, bad news for Eli Lilly since they don't want to partner. And eventually, I believe all those companies are going to partner. So I think that's a tailwind looking forward. And even if it's not, Eli Lilly wants to wait it out, there's other companies you can partner with, such as Marius, which I don't know what's going on with the oral testosterone, but like there are other healthcare solutions that aren't just provided by Eli Lilly and Novo that I believe will continue to, do well and come to platform. And I also think labs will do all right. So I have conviction, but they're not all on the same timeline per se. But they're all continuing to grow. The only one that was debatable was Hims, and that was until the partnership, and I was willing to wait that out because I knew what they were trying to do. Bob said, "How do I feel about healthcare finally showing some love?" It's good because in all honesty, and this was something I predicted. I quote tweeted it probably a month ago when Oscar and him first started to move, and they've continued to move. I said after the semiconductors run, I predicted that healthcare was the next second run. And Oscar, I'm really happy for those shareholders. Honestly, I used to hold. I did a quick swing on it. I did a swing on it. It's a great company, great CEO. Oh, they're alive now.
By the way, Ron, it took us all forever to get
15 minutes. All right, 3, 2, we're about to start. Great. I think we are live here. Hi, everyone. This is Ron Josie talking. I can't be on camera today for some technical reasons, but with us today, I'm always psyched to have with us David Steinberg, the co-founder, CEO of Zeta Global, and CFO Chris Greiner. David, Chris have joined us, and we've got some, very interesting, conversation to hear as Zeta evolves more to an infrastructure IR platform. I believe everyone should have the disclosures on in front of them. If you don't already, for me at least, please feel free to email me directly or let me know. But David, Chris, thank you for joining. Always appreciate talking with you all.
Ron, thank you so much for having us. This is obviously very, very big news for us, and we were so glad that you had the availability to help us.
So absolutely, and again, wish I were on camera. But let me start off. I believe Zeta's in entering the quiet period. Can't really comment on 2Q trends, so no financial update today. And the goal of today is really just how Zeta's evolving into an infrastructure layer. So with that, David, obviously we've had a lot of good track records of earnings, so we'll table that for a few weeks. But when we talk about what's going on at Zeta, and when we all met really about a week and a half ago in Cannes, it was about
it was very hot there, Ron.
It was very hot, indeed. Well, when we met a week and a half ago, I believe Zeta had just announced your partnership with Palantir. What I wanted to do as a first question is, my goodness, we've seen Athena launch in March. We've seen partnerships with OpenAI, Snowflake, now Palantir, and the pending integration of Foundry. A lot is going on Zeta. So maybe level set us in terms of how Zeta is transforming itself into being that AI infrastructure platform, and what exactly does that mean? And then as we go through here, I have a ton of questions about the partnerships, about where Zeta's going, but maybe bigger picture, just talk to us about the evolution of Zeta and how really 2026 has changed everything.
Yeah, Madison, let's go to the what's changed slide, which I think is very helpful. If you think about just the last few months, we've announced a multi-tier, multiple partnerships with OpenAI. We took Athena, generally available both for enterprise and then agency. We announced a major growth to our Snowflake partnership, and then the biggest thing we've done to date, which is Palantir. I said OpenAI was the biggest thing to date when we did that, but Palantir now usurps that. The reality is none of this was an accident. We've been building towards being an infrastructure / business intelligence platform for quite some time. As I've shared with you in the past, Ron, I've always thought of us as a business intelligence platform that started focusing on marketing because the total addressable market was so high. But with the combination of the launch of Athena and then Palantir, and I think there's been some confusion, which is one of the things we wanted to say. We should have Palantir fully integrated for phase one and have all of our existing clients on the data cloud moved over to the Foundry platform, I would say within 30 days of today, maximum maybe 40, 45. So we've been working on this for quite some time behind the scenes. And a lot of people were thinking this was going to be a late this year, early next year. It'll be done. Not only will we have Palantir fully integrated in the next 30 to 45 days, we'll have at least one joint launched enterprise client from their side this quarter, is what we believe, and very possibly more. But when we do move the data cloud over to Foundry, which will happen in the next, fully integrated in the next 30 to 40 days, all of our clients will then have access to the Foundry platform. Once we have that as our bottom layer infrastructure, moving from our three main use cases, which is customer acquisition, customer retention, and customer monetization, to what will now be our fourth official use case, which we're calling the Zeta Business Intelligence or Engine. So ZBI, a new one for me to remember. I should remember it. I sort of came up with it. But the ZBI is going to change the way business intelligence works. So today, according to IBIS, business intelligence is a $35 billion addressable market in the United States alone on a yearly basis. Today, the way business intelligence works is the software ingests old data from the past. I call it rear view mirror data. it then puts it into a format that a bunch of data scientists can ingest and look at and try to make decisioning going forward. By layering the Zeta Marketing Cloud and the trillions of signals that we're ingesting, we're now going to be able to forecast business intelligence changes with substantially greater accuracy in the future. So we think we're going to completely change the game in the business intelligence space by using our data cloud plus our clients' data in the same consumer data platform that we're currently utilizing, but literally inside of Foundry, which will allow us to gain access to all of our clients' data in real time and allow for real-time decisioning and real-time business intelligence. So when you think about the four big things that have changed over the last year that have led to this announcement and this evolution, it starts with OpenAI, then you had Athena, then you had Snowflake, and then of course you had Palantir, which will have fully up and integrated in the next 30 to 40 days.
So David, that's a lot. First of all, it's pretty exciting to see. So let me try to break this down a little bit more. When we were together in Cannes, maybe a week and a half ago or so, we talked about the transition happening, the 30 to 45 days. It seems a lot faster than what we and many others were thinking. So you've been working on this for a while. Just want to make sure I understood that correctly. So phase one, all clients moved over to 30 to 45 days. Did I hear that right?
Yes, all our existing clients that are using the data cloud will move over to Foundry in the next 30 to 40 days. It'll be seamless to them. They won't even know what's happening. What they'll see is two things right away. One, intelligence will speed up. And two, we think this will drive to a substantially higher return on marketing spend right away. We're already seeing with clients that have adapted Athena a substantially higher return on marketing spend. And we think that the addition of Foundry is going to accelerate that. We have one client that is now over 1,400% in return on marketing spend. This is real world, real examples. Chris is going to get into it in a bit, but we're going to be building an AI scorecard. We're not prepared to roll it out today, but we're looking. Madison, would you go to the compatible slide? No, the compatible slide, the slide of the other companies that are AI infrastructure companies that trade publicly. Correct. So if you look at this slide, you can look at the cohort of companies that we believe we should now be compared to, and you can look at the metrics that correlate to us and these companies. And in all cases, we're either 1, 2, or 3 as it relates to rule of 40, we're at 48. Mm-hmm. Or as it relates to net retention rate, we're at 120%. And the one that's really exciting is free cash flow yield at 5%, with, I believe, the average being 2%. So you can look across the board. Our company is already achieving the rules that are necessary to be an AI infrastructure platform. But when you think about the real benefits of this, and you look at Palantir plus OpenAI plus Snowflake plus Athena, we think the first big move is going to be a meaningful increment in return on marketing spend while we're simultaneously rolling the ZBI out to all of our existing enterprise clients. It opens up a new sales track into the CTO, CIO, or CEO in addition to the CMO. It opens up an incremental $35 billion revenue opportunity. But I would say even more importantly than that, it's going to embed us even more deeply into our enterprises, Ron.
And that's actually a key point that I was going to ask a little bit later on. But you talked, David, about expanding the TAM, the 35 billion, now being able to sell the CIO and CTO. So you have really 3 different owners potentially within an organization, as you know, for those 4 different solutions: acquisition, retention, monetization, and the ZBI. So talk to us about the go-to-market approach in terms of how Zeta is positioned today. Now that in about a month and a half, we'll be on Foundry. Things will go a lot faster. You talked about latency, and now we're also talking to CIOs and CTOs. We'd love to hear the approach here because it is a newer part of the organization. How do you get the introductions? Is a CMO doing this on a warm introduction? Talk to us more about that process.
Well, first of all, most of the big deals we close, we have CEO relationship, and we end up going through the CTO or CIO's office. So we already know all of these people, because when the CMO brings in a new component to the tech stack, the CMO brings us to the CIO or the CTO, and often I know the CEO, or we're able to build a relationship with them and come in that way. What I would tell you is that the sort of sales motion on this should be very similar, in that we've already been doing this for a number of our clients. We had one great use case recently where a very large hotel client of ours wanted to figure out where to put their next 500 hotels. So we pulled all of their most loyal customers. We looked at every one of their credit card transactions in geographies that they did not have a hotel, against their 4 main competitors. How many room nights were they consuming at their main competitors? We then drew a circumference, or a 5-mile concentric circle around that area. And that was where they decided to put their next 500 hotels. We then, as they've opened a couple of those, they bought a couple, quite frankly, in those areas. They're still building the ones that they're building. They used us to launch the marketing, to do conquesting, to move their loyal clients away from their competitors in the geographies that they opened locations. The other big thing we're looking at, Ron, is inventory management, and what organizations are going to manufacture next versus what should be discontinued. How should inventory be shifted on a geographic basis based on where people are? All these different things are natural workflows in the ZBI coming out of the existing relationship in the consumer data platform.
And so that's actually a good segue into the new ZBI, because when you talked, David, that example with hotels, that is now going into business strategy. That is now directly touching revenue, as opposed to through the marketing side. And so one of the things that I always find fascinating at Zeta is just your current data cloud. I think it's 535 million consented individuals across trillions of signals resolved, to real people. And so one of the things you said when we were just starting to talk here is just the data cloud into Foundry, but then also working with client information to put everything together. So talk to us a little bit more just around the opportunity with Zeta's data cloud into the Foundry, but also leveraging the data that the clients have, because that proprietary, that 1P and 3P data is really a significant differentiator from others, I would imagine.
Yeah, I think our data cloud is our biggest differentiator and our biggest moat as a company. I mean, if you look at the other 3 or 4 companies in the world that have a comparable or larger data set, they're all worth over $1 trillion. So when you look at this data, by putting it on top of Foundry, it's going to speed everything up and allow throughput of data outside of just marketing data. So now we'll be able to get all of their business data put into Foundry and into the data cloud as a subset into the consumer data platform. So what I simply like to talk about is how Foundry is a game-changing foundation for our new skyscraper that we're building. It's sort of the foundation that will allow us to go higher and allow us to expand out. Whereas in the past, we've been very sort of, I don't want to say pigeonholed, but we've been very thought of as a marketing platform for obvious reasons. The vast majority of our revenue came out of marketing. And marketing is going to continue to be an incredibly important application for Zeta for many, many years to come. I mean, probably forever, right? But at the end of the day, the ability to get even stickier, I shudder to say stickier because I want to reiterate last year our net retention rate was already 120%. But as we think about how do we get stickier inside an organization and how do we drive incremental revenue and margin inside of a customer, we've always looked at it as how do we solve our clients' biggest problems. And by adding Foundry on top of the data cloud on top of Foundry with Athena on top of the data cloud, you'll now be able to, in a very conversational way, ask Athena how to solve your biggest business problems. How do I turn my inventory more quickly? How do I shift inventory for specific products or services to markets that they need to go to? What new products should I be developing? What new products should I not be developing? Where can I go get the world's best employees to help work for my company as I try to evolve my organization? All of these are questions that the ZBI will answer with Athena.
And that again opens up to more organizations and use cases. I want to ask about the data in Athena, but before we do, let's make sure we're all on the same page on Athena for those on the webcast. We launched in March. I think we had a pretty large client win here recently, but maybe David, just step back for a second and tell us how Athena's capabilities enable the ZBI or the Zeta Business Intelligence layer so that you can obviously, build that skyscraper on top of Foundry. So I would love to hear more about what Athena does, what you've seen thus far, and then we can get into examples.
Yeah, so I would start by saying that Athena is meant to break down the friction between the human and the platform. So, as I sort of talk about, I don't want to get too, theoretical here, but for 400 and some odd thousand years, humans have been communicating via voice. It wasn't until the 1950s that we created the keyboard. And today, the average enterprise uses between 5 and 10% of the enterprise software they license, just because they don't understand the feature sets, they don't know how to use them. Most of our clients know how to fly a really good Cessna, and we've given them a stealth bomber. So by going to Athena, you can ask Athena in a purely conversational way how to solve your problems. Athena, I'd like to create 2 million incremental customers this quarter, and I'd like to do it while lowering my marketing costs by an average of 7%. How would you recommend I do that? And instead of the individual at that enterprise having to navigate 20 or 30 screens to do that, Athena does it for you, changes the screen to just give you your answer. It's going to do the same thing with business intelligence. You'll be able to ask Athena, how do I solve my biggest business problems? And Athena will change the UI in front of you to give you the answers. And, to me, sort of this intelligence AI infrastructure, which is really what we've built, is the differentiator in Zeta. And I think a lot of that's gotten lost over the conversation about marketing or not marketing. To me, marketing is a very large and necessary component of very large enterprises. We've grown our business now for many years in a row. We're on a 4-year compounded organic growth rate of greater than 30% over the last 4 years. And there have been ups and downs in that period, but yet we've still grown through them because we continue to take massive market share from our competitors. Back to the large win, if you jump to the slide that has the, we start with what's changed, which are the 4 things that have changed, which is OpenAI, Athena, Snowflake, and Palantir. Now let's talk about what proves it. Now let's go to the prove it slide. Thank you. So if you think we started with OpenAI as a technology partner, then they awarded us a meaningful component of their marketing serving business. We started with Palantir. We moved very, very quickly. We have a 7-year joint go-to-market with Palantir. And when Elias, who's one of the best partners I've ever worked with, Elias Davis, who's on Alex Karp's personal team, and we really worked with Alex and then his guys, Zach and Luke, to really get that deal over the finish line. He was, when he was interviewed and he was asked about the term of the agreement, he said the contract is 7 years, but we expect to work with Zeta forever. We feel the exact same way. And then, of course, to win a client like the Gap, which was a massive Salesforce shop, they use Salesforce for pretty much everything. We displaced 4 vendors in there. Salesforce was one of them, and then Braze was another, and then there were a couple of others that were in there, and they made us the system of record. I would tell you it's an interesting story because over the last 8 years, we've probably bid the Gap RFP at least 2 prior times and came in second both times. We came into this one, quite frankly, with a bit of trepidation because these RFPs for enterprises of this size and scale are very complex. They're a lot of work. They take a lot of people's focus for a number of months. But they said, listen, we're open to meaningful change and you really should bid it. So we came in. We were, I don't know, 3/4 of the way through the RFP process and we demoed Athena for them and they were like blown away. And I am 100% confident that Athena was the reason we went very quickly from this very long RFP process to them saying, okay, send us pricing, which is a very, very good buy sign. We then ended up closing with them. We're happy to partner with Sapient, who we work with regularly, and to become the system of record at Gap. But it all came down to the data cloud plus Athena was really what changed the game for us with the Gap. And once again, what changed? 3 new major partnerships and then a new game-changing product launch. What proves it? Companies like OpenAI, Palantir, and Gap trusting us as either their major partners or their vendors of choice. These are deals that even 4 or 5 years ago, we probably could not have closed as a company because we were not in a position to do that. And I will tell you, I'm looking at the roadmap and I'm looking, we've built an entire forward deploy engineering team now that is sitting inside a Gap. We have Palantir people helping us there. We have OpenAI people helping us there. All these forward deployed engineers are working together. We've got a room of forward deployed engineers with OpenAI. We've got a room of them with Palantir. We've got rooms of them with Gap. And I'm very, very excited about sort of this evolution of the business and, have gotten a real chance to spend a lot of time with the Palantir people in particular. And it's from the absolute top to everybody I've met with, they are just absolute rock stars. It's been an incredible partnership for us as we embark on this with them.
And as a system of record, is the system, forgive me with this question, but is this a system of record for acquisition, customer retention, monetization, and VBI, or and is it something you can envision?
So today it's a contract that's very focused on CRM and very focused on monetization. But we're already working on major projects on the other things, and I expect to expand out from what we're working on today. But once again, it's to be named the system of record was a big thing for us for a company of this size and scale. And we always want to think of ourselves as the challenger because I think that keeps you a little more hungry, Ron. But the truth is, we're really becoming the leader in this category. If you look at the Forrester report, you look at the wins, you look at 50+% growth in Q1, 29+% organic growth in the first quarter of 2026. You're really seeing us take meaningful market share from our competitors. And, as we expand into business intelligence, we expect to be able to do that there as well.
Sure. Maybe I've got maybe one other question for you on Palantir. We can go probably another hours on the Palantir partnership. I want to get Chris on this too. So David, first to you, you mentioned the cross-sell and go-to-market. I wanted to hear a little bit more about when you got Athena plus Palantir. I wanted to talk to us a little bit more about the broader cross-sell and joint go-to-market approach for both companies, Zeta and Palantir, and Palantir and the customer base there.
So once Foundry's live with the data cloud, which, as I said, should be in the next 30, worst case, 40 days, any existing Palantir enterprise customer will be able to just turn this on. There's a few exceptions for very highly regulated industries that we've sort of made a decision together. We're going to sort of not start with, and we're not starting with government for a whole host of reasons. We're starting, but I would say the vast majority of their enterprise clients we're already opening discussions. We've already made meaningful headway with a number of clients, and I would expect to have at least one of their clients turned on this quarter, in addition to having the full integration done probably by the end of July or very early August. It's just, once again, that Palantir is an organization that really, puts their money where their mouths are. And, one of the things Alex is really focused on, and the things that he and I have chatted about, is how he wants to take the best technology possible and help his clients solve their biggest problems and help them save the most money in their organizations. They didn't really have a marketing solution until they decided to partner with us. So I think that from a pipeline perspective, you're going to see a meaningful uplift in the pipeline as you see Palantir come online. The truth is, the first few deals I'm doing myself with very senior guys over there and women over there, because I want to build the sales motion personally. But these deals are so large in nature that doing the first few myself, so I can really build the sales motion and then start to bring others into it, I think will accelerate things, and I'm very excited about where we are.
That's great to hear with that insight and color. And then Chris, I think we've talked about 100 million ARR at some point. Help us a little bit more on the roadmap. This is part of the Palantir partnership, of course. How do you think about that 100 million? How should we think about that 100 million now that we actually have, a great foresight, or at least a vision for 30 to 45 days of going live here?
Yeah, I think the best way to think about it is kind of really zooming out, and you think about our long-term model and the visibility that we have into it. So, the short answer is this adds to our confidence that we can get there early. When we rolled out our first long-term model, Zeta 2025, which was get to $1 billion in revenue, we got there a year early. And we built the current model with the same foundations of conservatism and reliance on partnerships, our own organic selling, and new channels that we'll introduce in new use cases, as David just talked about with Zeta Business Intelligence. So I think this is just one of many levers. We've given ourselves ample room in our model for this to scale and grow and perfect the go-to-market model. But we think of it really as just more upside and ability to get there faster.
And I should point out, again, Ron, I just want to say we've already fully budgeted for all the expense in this contract for this year and the out years. We've moved money from other vendors to Palantir, and it's going to be, this should really be additive to operating margins in the years to come.
And that's I think you and I, we've spoken about this as being cost neutral in 26 and potentially op savings in 27. Is that a fair comment?
I think it'll help us continue to drive down our percentage of operating expenses and sales marketing to revenue, which we've done now, I think, 4 or 5 years in a row. And I think that's a trend that will continue. Chris, do you want to add to that?
No, I think you're right, Dave. You said it well.
Perfect. So we'll come back to Palantir in a second. I want to make sure we get to all these partnerships, because this is what has changed the game a little bit here in 26. Talk to us about the OpenAI partnership. I think it spans both product, I think voice capability for Athena, advertising, and others. And so would love to hear more about the partnership with OpenAI and how the team over at Zeta is leveraging GPT to build Athena or to go to market faster.
So it's interesting. We just did a third deal with OpenAI this past week, where we started using OpenAI for all of our employees instead of Copilot, which was a big move for us. We've been a Microsoft shop for quite some time, which, listen, even furthers the partnership. But what I would say is it started because we were looking for the world's best voice engine. We had years ago built a product called Zoe, Zeta Operating Engine, I think. That was our first evolution into voice. And it was like being on an old walkie-talkie, Ron. You'd say, Zoe, how would I do this? Stop. And you'd sort of go in and out. Clients who use Zoe spent, correct me if I'm wrong, between 300 and 350% more on the platform.
Yeah, between 200 and 350%. Yep.
So, they're spending meaningfully more in utilization fees on the platform. And we said, voice is really the future. how do we solve that? And for us, there's no better partner in voice activation than OpenAI. We do use a bunch of the other models. We partner with Claude, we partner with Gemini and OpenAI, and we use Cursor and so on and so forth. But the reality is that we felt like OpenAI had the best voice interface. I do want to be clear also, to clear something up. We never use any large language model to see any data in our data cloud. Our entire data cloud operates on our own proprietary models that we've been building since 2017. But I would tell you the vast majority of what we do from an AI perspective, and we think the future of business-based AI, is inference-based artificial intelligence. And large language models are obviously very, very important, but you don't need to ingest the entire internet to figure out if somebody's going to get a new credit card, buy a car, or turn off a wireless platform, right? We need 30, 40, 50 really good, really fast pieces of information that we're able to do with individual agents that are looking at all of this trillions of times. But when we wanted to build a voice UI, we didn't have the capacity to do it in the time frame in which we wanted to roll out Athena. So OpenAI started as our partner. We use their voice engine. It gets smarter about the individual using it, whether they're at an enterprise or an agent. It begins to understand their inferences and get to know them so it can better navigate the Zeta marketing platform. Whenever Athena does a data pull or is creating information or changing the UI, it's on our models and our platform. So that's where it started. And that went really, really well. In fact, I think we were one of the first enterprise applications to go live with OpenAI, and they were shocked when we went generally available on time. They were like, wait, you actually did this in the exact date? We did it 8 days early, but you did this before you actually committed to doing it. That really got their attention. And we had already been talking a bit about helping them on the advertising side. I think one of the things that also is not understood is how powerful our GEO platform has become. So many of our clients want GEO, and GEO in its heart is a ZBI product. It's an intelligence layer product for business intelligence, where it's helping enterprises to be better recognized inside of the large language models. And our platform integrates into OpenAI, Claude, Gemini, really every large language model. We're also getting meaningful data out of the API that makes our platform much, much smarter and starts the flywheel there. So that was sort of phase two, was getting into the advertising space with them. And then this past week, we just made ChatGPT available to all of our global employees, and we're sunsetting Copilot as a part of that. So, we felt like it was the right thing to do. We've got our people in the room with them all day. We wanted to make sure we were working together to support each other's businesses. And we think it's going to be a very powerful lift for our employees.
I mean, I think voice as a new interface is a very interesting concept. And I want to make sure I heard the impact from those clients that use Zoe. If you could just repeat maybe the benefits on the platform. And then I wanted to maybe get a question, David, bigger picture. Do you think voice is ultimately, the best complement to the UI going forward? Is it possible that people use voice more than keyboards over time?
Well,
so two questions. One is Zoe, and then the voice.
Let me start with your second question first. I think that, once again, enterprises and the individuals who work there just want their problem solved.
Yep.
Whether they use a keyboard or they speak to the platform, they're just trying to get to a solution, whether it's around customer acquisition, retention, monetization, or business intelligence. Okay? The easiest way to do that is to speak to it. But one of the interesting things I don't know if everybody knows about Athena is you can just as easily go into the Athena chat box and type your question. You don't have to use the voice. The thing about Athena is getting to the answer and utilizing all of the available data sets in the data cloud all of the intelligence in the platform to drive the best results in any of the four use cases we focus on, right? So some clients like to type into Athena the exact same things that other clients like to say. It's just what I think they're used to. It also, I think, depends if you're sitting, with other people around you. It could be inconvenient to have to speak to it. Whereas if you're alone in an office, it's much easier to speak to it. So we
Sure.
wanted to make sure that it was convenient. But to answer your question, I think solving complex problems and allowing enterprise individuals to use up to 100% of the feature set and the data sets inside of our enterprise software platform is the real key to, in our three marketing use cases, getting to the highest return on marketing spend. And as I said, we've already got clients north of 1,400%
Right.
return on marketing spend who have adopted Athena. And then as it relates to the ability to put it into a chat box, you can do that or you can speak to it. Well, I'm sorry, what was your other question, Ron? I apologize.
Oh, just maybe Chris could repeat the customers, the clients that use Zoe spend, was it 300% more or 3x more? I want to make sure everybody hears that on the webcast.
Yeah, it was between 200 and 350% more for those customers in the first generation of Athena when they leveraged automation.
200 to 350% more, and so now we're next iteration. That's perfect. And so maybe I want to take a step back here. I do want to get into longer term goals, but maybe David, if I could take a step back, and this is a year where we've had the partnerships with OpenAI, with Palantir, with Snowflake, the launch of Athena, newer business models launching. If we take a step back and we
by the
think
way, Ron, the year's only half over.
Love it. So the question is more, David, when you think about the moat that Zeta has, what would you say is the biggest competitive advantage that Zeta has as a company?
We have a lot of moats around our company, but I think the one that is the hardest to replicate is the data cloud. This is not something that could be built overnight. You couldn't throw money at building this type of scale. You look at it, I do believe that in the years to come, there are only going to be 3 or 4 real winners in the large language model space. I like to remind people that at one time there were, over 1,000 companies in the United States manufacturing cars or automotive parts. That sort of consolidated down to 5 or 6, depending on how you look at it. And I think you're going to see a very similar thing in large language models. I think the biggest differentiator is going to be the data that you feed into your own models. And the fact that we have 535 million individuals who have consented to be in our data cloud, that we have an average of 5,000 to 7,000 data elements per person, the fact that we're now sitting as a first-party component of the technology stack for over 5 million publishers, sitting on trillions of pages of content that synthesize back what individuals are doing without needing a third-party cookie, meaning everything we do is first-party and deterministic. It's just a game changer as it relates to the ability to take our clients' data, our data, merge it into one ecosystem, and allow our proprietary models to do the work. These are the same models that are going to do the work around business intelligence. Mm-hmm. The information we ingest about credit card transactions, clients' credit score, real world location, all of these things are mission critical to the ability to make high quality business decisions. The other thing that's really interesting is if you think about sort of, once again, the evolution of the business, the purchase of the loyalty program that we did late last year in the purchase of Marigold, we're now feeding SKU level data into the models for the enterprise clients that use us for loyalty. So, we're seeing massive game changes there. And back to loyalty, loyalty is part of the ZBI, right? You've got a platform that is ingesting intelligence. Yes, it's trying to get the consumer to buy more, but more than anything, you're ingesting every single transaction down to the SKU level. What should you be doing from an inventory management perspective? What products should you be creating and rolling out? What products are not selling that you should be killing? All of these are decisions that we made purposely over the last year as we've tried to pivot the business, or evolve the business, I should say, from what has been pure marketing into what we believe is going to be marketing and business intelligence.
That's great. That's super helpful, because we are emerging. And so one of the things that we get, the questions we often get is, what is an AI infrastructure, intelligent infrastructure company? What does this mean? I think if I put what you were saying, back, it seems it's speed to market, it's ingesting data, it's analyzing the data, and doing more than just one function. But I'd love to hear your thoughts.
The way I think about it, let's go to this slide again on the compatibles, Madison. But the way I think about it is, when you're selling somebody a software product, you're a line item in the P&L that the CMO has to justify every year to the CFO. If you're infrastructure, you are mission critical and necessary to the operation of that business. And I think that's the single biggest difference. And back to why we think net retention rate is such an important metric inside of what differentiates an infrastructure platform from one that isn't. And by the way, I'm not talking about semis, and we're certainly not building hosting centers. But the reality is that when you look at these other organizations, they're the ones that we think of as infrastructure. They're the ones that are embedded in their clients. And the big difference is, not only are you mission critical to the operation of your clients' businesses, but you're a revenue generating source, not seen as an expense.
Yeah.
And Zeta has been that for quite some time. When you're returning 600+% return on marketing spend, your clients look at you as a revenue generation platform, not the other way around. But now, when you look at the adoption of Athena and our goal of getting all of our clients to an average of over 1,000% return on marketing spend, that accelerates even further. And when you look at adding this business intelligence layer, it's going to add that even further. So when we refer to infrastructure, we're referring to organizations that are fully embedded and are a component of the client's tech stack, that every year the line item's not even looked at. The CFO just says, yeah, that's infrastructure, approve it.
That's great. I think that's a really key differentiator, seeing not as an expense, but as a revenue generating source. That's the ideal. And I think you use the term service of record, or that's really the key.
Yeah, system of record. Yep.
System of record. Chris, one of the questions we often get is, Zeta's monetization model, and I believe it's utilization focused versus subscription. Just talk to us about the visibility of these two models. Why Zeta's utilization, and why that's the right approach going forward?
Yeah, so first, we'll continue to have a mix of each, but what David is focused on throughout this call is the outcomes that we generate for our customers, and that's why utilization is an important component of the revenue model. If you think about utilization, it's really the point of impact where customers experience the byproduct of the data and the AI working in tandem. And the fact of the matter is, our flywheel spins faster when our return on marketing spend is superior to the competition. So when we see those returns, which we can see inside the platform, our customers can see the returns they're seeing in real time, it makes utilization a very important and predictable component. It's about 40% of our total revenue base, whereas recurring software is about 60%. Combined, that revenue is predictable because so much of our revenue, over 90%, is driven by customers that have been with us over a year, and almost 3/4 driven by customers that have been with us over 3 years. I think what's important to me too is just how reliably both of those components, recurring and utilization, have been growing. In fact, over a multi-year period, recurring revenue has grown 36%, and utilization revenue has grown 25%. So not just predictable, but both growing at a very high and rapid rate.
Well, the funny thing is that, and I'm not saying it's exactly the same thing, but you could look at our utilization fees as a Zeta token. And that
Sure.
might be something. And we're looking at the scorecards and what we're building. But, when you think about it, we're charging them to utilize the platform. We're not charging a per seat fee, which has allowed us to scale. It's the same thing that the large language models are doing with tokens, right? You've got some companies that have decided to move to pure utilization and some companies that are pure SaaS. We've always been sort of 50-50, 60-40, and it's been very healthy for us. And listen, we've reported 19 quarters as a public company. We've beat our guidance and raised our guidance 19 times. At some point, people are going to start giving us credit for having high quality visibility into our numbers.
Right. No, and to that, I mean, I think that there's a growth target, or at least Zeta's 20% organic growth and free cash flow margin expansion, I think are some of the key North Stars of the business. Just talk to us a little bit more about why those are the right numbers. I think, I'm sure I'm getting questions. Why is that the right number? Why can't we grow faster? So maybe that's to both David and Chris. Yeah.
We grew 29% in the first quarter organically. We're not modeling to that for the next 5 years. What we're saying is we believe we can be a 20+% organic grower at scale for many years to come. We're not just looking at this year or next year. We're looking at many years. So, we see that as a minimum number. And, quite frankly, I think we've surpassed it. As I said, we're on our fourth year of an average of 30% plus organic compounded growth, higher than that for EBITDA and higher for that for free cash flow. But, listen, the market's not really sort of paying us to project higher at this point. And we'll continue to, leave some conservatism in our model. Chris already insinuated that, and I think we've shown that. And, we'll always try to beat and raise our numbers. Our goal will be, next year to be talking about 23 consecutive quarters, the year after that, 27, and so on and so forth. Chris?
Yeah, David, you said it well. I mean, we'll often get questions too, Ron, on what are the drivers that give you that level of confidence. And as David said, it's been 4 straight years over 30. It's been 7. This will be the 7th straight year of growing revenue over 20% organically and expanding free cash flow margins. So when you think about the model itself, the top line model is really driven by 2 parts. First is our ability to see and predict and grow new super scaled customers. The key component there is we are not beholden to RFPs, which can be extremely large sales cycles. Things go bump in the middle of the night. Someone leaves on vacation. You don't get a deal signed. We sign $50,000 to $150,000 proof of concepts that have a faster return on marketing spend and a superior return on marketing spend that allows us to then get our foot in the door and then grow reliably, which then in turn leads to the second part of our revenue model, which is how customers grow their spend with us. David talked about the addition of new channels, the addition of new use cases. We've consistently beat on both what our model growth rate is for adding scaled customers. Our model is to grow between 4 and 8% year over year new customers. We've grown double that on the high end. We've averaged over 15%. And to grow their spend with us year over year between 12 and 16%, we've averaged over a multi-year period at the high end of that 16% range, with last quarter being 21%. On the bottom line, we know what we deliver from a channel perspective, the margin profile, and we've begun to move work where it can be delivered in centers of excellence, not just by labor forces that have better price points, but more importantly, labor models that are relying on automation. And that's what's been allowing us to grow free cash flow and now GAAP earnings even faster than revenue.
And so I have to ask, Chris, because I think you mentioned, we have longer term targets and we've achieved those early. I think we have 2028 targets out there on revenue. And that was before the Palantir announcement and before, the potential, ARR that's coming down the pike. And so help us understand a little bit more how you feel. I know you said meeting earlier, but how you feel the target world.
The best thing about the best thing about it, Ron, is when David and I get to sit with investors and analysts like yourselves, we don't have to go off field. We provide you with metrics, right? We tell you just what I stepped through, how fast we should be adding scaled customers, how fast their spend should be growing, what the net revenue retention rate of the business should be, quota carriers, the mix of our business. On every one of those components, we publish what the model is to get to the long-term target, and we publish how we're performing against it every 90 days. And we are in a position, because of the execution that David talked about, to be ahead on every single one of those metrics. And I'll leave it with that bodes really well for getting to the 2028 targets in a timely, if not faster manner.
And so maybe as a follow-up to that, when we think about NRR, and we talked about the comparable slide that you brought up earlier, what do you think are the distinctive characteristics that drive that NRR going forward? Obviously, we have these new products. I'd be curious about the upsell capabilities and things along those lines.
I think a lot of it. Yeah, I'll just start, Chris, and then I'll throw it to you. I think a lot of it to date has been this massive return on marketing spend, where clients are looking at, for every dollar they spend in our platform, according to an independent Forrester survey, we're returning 600% return on marketing spend. And as I've said, we're seeing upwards north of 1,400% for some clients who have adopted Athena. So I think we're going to continue to see that happen as you add new products like business intelligence. It's going to continue to drive a higher net retention rate. Chris?
And the fastest growing parts of our business, Ron, are exactly what David described. Customers that are using 4 or more omni-channels with Zeta are growing 40% year over year. Customers on more than one use case are growing over 50%.
That's good. That's super helpful. And then I have 2 more questions, and then we'll let you go. We've got 4 minutes left here, but the questions keep coming to mind. David, I have to ask, with a 14x for some clients who've adopted Athena versus the called 6x overall, what do you think is the difference? Obviously, Athena is the answer, but what did Athena do to enable that 14 times? Was it faster time to change approach if things weren't working? Was it just out of the gate, things were just better? Help us understand that, because now 14x is something that we'll be thinking about quite a bit.
Yeah, and I want to be clear. So if Chris were here, he'd be kicking me. The good news is we're in different states, so he can't kick me here. But what I would tell you is that not all clients are at 1,400%. We've got a number of clients who are at 1,400% who have adopted Athena. I think the biggest thing is most of our clients don't know how to use all of the features or access all of the data sets. So instead of going into a platform that you have to navigate everything, you can now literally say, Athena, how can I create meaningful, greater customer growth at a comparable cost? What marketing would you cut and what would you add? By the way, Athena can ingest all of their marketing, whether it's other platforms, and it's able to, in a very neutral way, show them how we can drive substantially higher return on marketing spend than they're currently getting from other vendors. I would tell you that new use cases and new data sets have been the single biggest Athena wins thus far as it relates to meaningfully stepping up the return on marketing spend.
That's great. And maybe as it's one of these last ones, and that gives us a lot to think about, the 14x and the new use cases and data, and also how voice enables users to find more of the features. What I wanted to maybe wrap us up on is we have Zeta Live coming here soon in early October, if I'm not mistaken. And so I think, David, you sort of teed it up to we're only halfway through the year and we had some pretty big announcements. So talk about what we might expect for Zeta Live here and going forward.
Well, listen, I don't want to spill any tea and get my team super agitated with me, but we've been pretty open about the fact that, our goal is to turn Athena into a full operating system for our clients' businesses. I'm not sure we'll get there by Zeta Live, but we're certainly trying. And what I would tell you is that I demoed Athena and her capabilities to a number of Fortune 500 CMOs or decision makers. And 4 of them, during the course of meetings, stopped the demo and asked if they could license this platform to run their entire company. And I said, that's the goal, right? And if you think about the first quarter of 2026, we publicly announced that we auto-generated greater than 75% of all of our new code. We've created a platform called Spade. A base level programmer can go into Spade and say what type of code they want. Spade then looks at which large language model is best to develop that piece of code at the lowest token utilization. So by way of example, for cyber, it might be Claude. For complex programming, it might be GPT. For publishing program, it might be Gemini. We use Cursor inside of Spade. It then designs the code. It then sends it to Zippy. I swear I don't know who makes these names up, but it was probably Chris Momberg. But Zippy then QAs all of the code, sends it to an architect. So you've actually bypassed the engineering layer. The architect gives it a review, pushes one button, and it goes generally available. It took us 9 months from when I came up with the idea for Athena to launching her generally available. 3 months later, we launched an entirely differentiated platform inside of Athena for agencies. That's how fast things are accelerating. So as you think about Zeta Live, I'm not even sure everything we're going to roll out, but we've got some incredible talent. We've already announced we've rented the David Geffen Theater inside of Lincoln Center. So we're going to have more room than we had last year. We're going to be doing an insane dinner with some unbelievable entertainment. I don't have permission to disclose it. Last year, the chain smokers on the deck of an aircraft carrier will be tough to beat, although I think we might have it. But what I would tell you is that the single most important thing is that the 2,000 people that will be in the room where it happens will be the decision makers that make the decision on greater than $100 billion a year on marketing spend. That's who attends Zeta Live. So
remind us the date.
What?
Remind us the date again. October.
Sorry, Ron. Yes, October 8th in New York City. If you'd like to attend, please go to our website and sign up. We do have some curation layer, but the reality is that I think it's going to be an unbelievable year. We've announced Kevin Hart. We've announced Lindsey Vonn. I mean, talk about tenacity in Lindsey. Talk about a guy who understands entertainment and business in Kevin Hart. As I've said publicly, I think beating Tom Brady and Serena Williams last year is going to be tough, but I think both of them are great. And by the way, we have 2 or 3 more game-changing keynotes who have said yes verbally that we're trying to get through the process with so that we can announce them. But I will tell you that last year and the year before, the product roadmap presentation that Chris Momberg and Nij Gore give, we had people sitting on the floor. You couldn't get into the room. So we're moving it to a bigger room this year so that hopefully we can get more people in. But I'm incredibly excited about what's going on at Zeta. It's hard to believe when you look at the level of partnerships, the level of growth, the level of productivity, the new products rolled out, that we're only in the first week of July. It's, I'll say what I always say, Ron, we are just getting started here at Zeta.
Well, that's a perfect way to end it. Thank you for taking an hour of both of your time to do this. And, as we enter the quiet period, or we're in quiet period, I guess we'll be talking next few weeks on earnings, which is exciting. And with that, that's probably a great way to wrap it up. I don't know, David or Chris, if you have anything else to say, or with that, maybe we'll just call it a night.
Chris, you want to add anything?
Thank you, Ron.
Ron, thank you very much. We really appreciate your putting this together. When you asked us about it, we thought it was brilliant and thought it went very well.
Wonderful. Thank you for your time. I certainly learned a lot. So I look forward to the next update.
Thanks, Ron.
All right. Thank you. Bye-bye.
Well, shit. Excuse my language. Crap. That was something. There's a lot to dig into. To answer Peanut's question earlier, he said, how good really is Athena, though? And what I would tell you to do, if I'm assuming you don't come from like a marketing background, um, go and do the Google Analytics course. So do a tour, and you can go through. It's how people, go do their SEO, and how people run their advertising, and just roam through it. You will realize how many um like how many just different sections throughout the whole platform you have to search through in order to find something that really just shouldn't be that hard to find. And then once you kind of have an idea of how complicated that is, then you have to realize, okay, there's more than Google search. You have meta platforms analytics that you have to go through, or you have just a different company like Trade Desk, and they have their own analytics, or Adobe. And so then there's all these software platforms that have to know how to navigate. Where Athena is just getting put on top of the application, you simply say, "This is what I want to see," and it pulls it up. It saves a lot of time because the idea of everybody knowing how to run a platform inside each company and not having to get trained and is just like not realistic. Most people who search out a marketing job, sometimes they say they have experience, but a lot of people who get into the field, they go into it not having that experience. Um, and so, maybe someone worked a lot with Google Analytics and is really good in SEO, and then they apply for a new job, but they use a slightly different software. Or not slightly different, but a different software, but still dealing with paid search. And he's very skilled at his job, but now he's learning a new platform, so it takes him time to get accustomed. It's cutting out that friction. So I would say that Athena is a very great tool, and as I talked about here, it's been a great addition to the company. Now more into what we just heard. A lot was unraveled. You got people doing 1,400% ROI, which they mentioned in past interviews that they had a customer reaching 10%, and a lot of it was because of loyalty memberships that they keep track of. And they're finding a lot of success being able to feed that into the data model and having their SKU purchases and knowing what items, one, they've already bought, so maybe they don't need again, or two, maybe you have, an iPhone or something, and so they figure we don't have any SKU data connected to their loyalty number about them having bought, AirPods, or maybe they haven't bought something like a privacy screen in a long time, and so they assume that maybe it's cracked. So then they get advertised for that, and so they're seeing a lot of success there. I don't know enough about Palantir's Foundry, and they didn't really talk about it exactly. What type of data they get in addition? I know that it is more business backend stuff, but I don't think there's any loyalty data tied to it. But I do think it is interesting. They are officially creating a um, business intelligence portion of the company, so it's no longer all tied to marketing, land customer, and we're just being additive to what we're offering you. They're segmenting it up now, and he talked exactly what I was talking about earlier. It's going to help you with all things in your back end, and he mentioned the 4 enterprise clients that stopped him, asking them, like, can we use this for our whole back end now? And that is eventually the goal. We're not there yet, but that is the goal, and enterprises want this. And we're not talking about small, mid-cap enterprises who are looking for something groundbreaking. We're talking about established enterprises who are looking to continue to win, who are already, ready to fully adapt Zeta. So that is not small in itself. It's not small at all. I'm trying to think. Comment anything else you guys think I should talk about. I low-key, when I have to pause a lot of the time. The moment I hear something, I want to pause and rewind to make sure I hear it correctly. So I know I'm going to have to rewatch this. There was a lot that they just told us. I'm trying to think what else he talked about. Um, the Palantir partnership, we kind of already knew. It's a 7-year thing, but both sides see this lasting, forever. And this is, I did think it was cool that they said that they had already been working on integrating it in the background. So this thing is completed in, 30, 40 days. Um, that's officially Zeta's going to be built on that infrastructure. So that is huge. And yeah. So if nobody has any questions, I'm going to wrap this up here. I have to go rewatch this, and then by the time I rewatch this, ZBI, yeah, Business Intelligence, like it's pretty much everything I've been saying. Uh, you are gathering more enterprise data. It's going to strengthen their model, and it's going to open up more use cases, and it's going to eventually lead to the whole back end being ran. You're talking about inventory. You talked about what products you need to, stop. What products maybe it's a need. Maybe it's not specifically telling you invent this product or whatever, but it's saying customers are looking to solve this use case. And now you know what use case you need to solve, and you can innovate from there. It's not literally going to be like, here's a product, make it. Maybe one day. I don't think it's that advanced yet, but it's going to help you innovate new useful products, cut out products you don't need, which products are seeing the most demand so you can fill up on inventory, which ones aren't selling as much, maybe you don't need as much inventory but still winning product. Yes, organic growth will continue to grow. They're doing 29% now, 20%. We kind of we already knew this a little bit. We always knew they were being conservative with the 20%. And as they continue to innovate and make their platform stickier, organic growth is only going to accelerate. 30% is nothing. I mentioned that in my recent post is, Palantir, when it was at $20 or whatever, they were only growing 30%. You wouldn't know nowadays. They were only growing 30%. It takes a while for enterprises to fully adapt you. It really takes enterprises to realize if we don't adapt you, we are going to die from our competition that does. It takes them to realize that for them to be to full send. And then when they full send, they really full send. And that's why you see Palantir growing over 100% now. Or they're not over 100% now, but they're saying they're going to do 100% growth next year. And that is because when enterprises commit, they commit. But until then, it's like they slowly integrate. It's this just steady compounding growth. I mean, think of most SaaS companies like now they grow like 20%. Salesforce, they grow like 10%. It's just like a slow thing. And we know Zeta's getting integrated well because organic growth is 30%. It's above these other SaaS companies. But when it really picks up, I wouldn't be surprised if next quarter there probably be if I took a guess, 32%. But I think they'll get over 35% consistently by the start of next year. Yeah, so you said, what about their operating system goal? It's kind of the same idea of them running the back end. The only difference is when I say they're running the back end, you're also talking about Zeta not Zeta, Athena being involved, and so that's your voice agent, and whatever you want to prompt or whatever you need, operating system, you ask it, they deliver. And that goes off of what I was saying just a second ago. Could they become a company like ServiceNow? So this is where I need to do more research on ServiceNow. I haven't done research because I'm when honestly they're both still undervalued, but it's not necessarily the return I'm looking for. But from what I know of ServiceNow, they are using AI agents um, and delivering that workflow with AI agents to enterprises. And if anything fails, it comes back to them, is how I understand it. I think there will always still be a need for that. I mean, as you hear, Zeta talks about, they do their own vibe coding projects like Zippy. I remember him talking about that. That's something they vibe coded. I remember him talking about it in a previous interview. So there will always be these AI agents that these companies are working with. Now, as far as the need for ServiceNow, I understand that the token costs and making all their own applications, every single one, doesn't make sense. And so putting those operating costs on one company who then delivers it to a bunch of companies makes sense. I don't, like I said, I have to look more into it because I know there's more to it than that. I just I haven't dug super deep. I have a base idea. But could they become a company like ServiceNow? I don't, off my base idea, I don't see the connection. Zeta's delivering you solutions with real data that AI synthesizes and delivers to you quickly, where ServiceNow is delivering you AI agents so you can go and make whatever application that helps make life a little bit easier. Like even Zeta uses it. So if you think like Zeta could replace ServiceNow, I don't think so because even they're using AI agents to help them. But yeah, like I said, I'd have to dig a bit more into that. And it is something I want to dig more into. I just haven't, mainly because I don't have the capital and I'm young, clearly, and I just got out of college. So when I have my three main core positions, it's public information. I have 500 shares of each one, and it's all my money. It's all I'm worth. And um, when I'm thinking about like when I'm 30, when I'm 35, how many shares of these three companies I want more than that. So my main focus is learning as much as I can on these companies. And I still get an idea of these competitors. Like I said, I have a base idea of what they do, but I know as long as I know enough that's not encroaching, I just stop there. Um, all these companies willing to switch from Salesforce to Zeta, what's stopping them from switching back to Salesforce? So, like I said, the problem is nothing is stopping them from switching away from Salesforce. Salesforce doesn't have anything. They have no data. They have no. Um, so I covered this earlier, but what stops them is so when you're working with Zeta, and he talked about it. Athena starts to get to know you better, and it's the same thing. It gets to know your data. It has their data, but it also gets to know your data. And the moment you get off, you restart your progress. So that's one. Two, Salesforce isn't giving you ROI. Like not like Zeta. So why would you want to use Salesforce? And then three, I mean, you can come up with the bear case of. Well, he also talked about this in the Amit interview. Is Salesforce can't just create a um, data moat and then implement AI because Zeta built their infrastructure machine learning model um, and then put everything on top of it. At this point, companies have to go out and get it, and so it creates latency and it messes up the return on investment. And if you really want that answer, go to the basis points interview. He's gonna explain it a lot better than me. Cause like I said, I'm just trying to repeat what he told me and like try and remember on the spot exactly word for word. But go to the basis point interview. It's like it's in the very beginning. I got my guess would be like the 5 minute timestamp, and he answers this exact question, like why you can't just replace Zeta and their model. And then you can I mean, I just don't think it's even worth arguing. You can argue, Zeta's gonna stop returning ROI. Like Data's never gonna lie to you. Could someone acquire Zeta? Yeah, I mean someone could, but they're not going to. It's like saying, it's like back in the day with Palantir. Like, could someone acquire Palantir? Yeah, but do you think Alex Karp would have ever considered it? No, because same thing with David Steinberg. He clearly has a bigger vision. When a CEO has such an ambitious goal, they're not gonna just sell it out, because you're pretty much just selling out like your money, your investment. He's going to make a lot more money when he turns this into a 100, $200 billion company than when it gets acquired at what, 8 billion, and then he's answering. Then he has to answer like he already answers to the board, but then you have to answer to a CEO who then also answers to a board. Like no ambitious CEO wants that, because that just handicaps what you can do. Even if you're on the same page, you guys are gonna butt heads. So yeah. But with that said, I'm going to wrap this up because I do need to rewatch this. And I'll be posting all my other thoughts on X. Like I said, I have a hard time listening to something fully through. Like I'll notice there's something like he'll say something that triggers like my memory, like, oh, I need to take note of this. But then by then it's like I missed part of it. And so I want to re-listen to everything. I'm gonna post my complete thoughts on X after, and it'll just be one huge post. But overall, it was very insightful. The market clearly thinks so. I saw the stocks up over 2% in after hours. I'll see if it went up some more. But we are at 22.50 last I saw. Oh, we're going up more, ladies and gentlemen. We are going up more. We are up 22.50. We're up 3% in after hours right now. So market clearly likes it. We could very well see 23. Maybe we hit $30 sooner than I thought. Maybe. And if we hit $30 sooner than I thought, I think the Santa Claus rally might mark price discovery mode. And from there, in the beginning of the year, I put out a $40 price target. That was before I was really looking at the technical analysis stuff. I think it's possible. I really do. I think it's right there. And so I'm excited for what's coming. There's very few times where I can't see a bear case scenario. And right now, Zeta, I don't see a bear case scenario. And it's crazy. The only bear case scenario I can possibly give is they're growing 29% organically. Like, yeah, I'd like it to be 40% like SoFi, but 29% still taking market share. And I know how these enterprise clients work, so I'm not worried about it. Not worried about it whatsoever. I'm actually very happy about it because I know what's coming, and I know I get to buy more shares before it comes. So, like I said, as always, none of this financial advice, but I am very excited and pleased with what the team is delivering. I'm excited to honestly re-listen to this because I'm really going to get to like gather all my thoughts, and I'm going to share it on X. But I do want to say thank you for everyone who tuned into this live stream. If you guys haven't already, please hit the thumbs up button. Also hit the subscribe button. Little cliche, but it helps support me and my content. And I enjoy doing this for you guys. So thank you guys for all tuning in. And I'll see you guys in the next live stream or next video. I'll probably be seeing you guys earnings season next time. We're back live, so I'm excited for that.